Hello again, fellow BeachBum traders. Welcome back for part 2 of our weekly trading game plan for the week of January 31st through February 4th of 2022. And in part 2, we'll talk about the updates to our watch list, strategies going forward, updates to our bullpen, etc. If you have not already seen part 1 of our weekly trading game plan for this week, we would highly recommend that you see part 1 back on Mr. Market's Wild Ride. And again, that will help you understand our market analysis, the data inputs to our stock selections for this week. So let's get started. First, as a reminder and then an observation, please recall that in our weekly trading game plan video from last week and in part 1 of this week, from last week, how to make money from a bear market, we have a list of leveraged ETFs that you can use to long or short the major indices, treasuries, global markets, etc., commodities. We'll talk about those a little bit, but in this bear market, choppy, range-bound market, playing these leverage, either swinging, day trading, breakout trading, these leveraged ETFs is probably going to be your best opportunities, particularly if you're nimble and you can play these on the rides up, or if it's a decline and a bounce, you can use these leveraged ETFs if you can catch these reversals. These are probably the best opportunities in the current market to make money in the short term. So again, I'd highly recommend you review those. We're not going to reproduce them right now. I did put them, I believe, in our Facebook group, our BeachBum Trading Facebook group as well, so you can reference them there as well. Another observation that we saw this week is even though oil spiked up and natural gas spiked up briefly, we didn't see necessarily the spikes in the leveraged ETFs, GUSH and DRIP and BOIL and KOLD exactly match the spikes in the commodity prices or the commodity future prices. And the observation is that's because these ETFs are not directly correlated to the price of the commodity or the futures. They're comprised of individual stocks or companies that are exploration. So GUSH and DRIP are oil and gas exploration companies or stocks, and BOIL and KOLD are natural gas stocks and companies. And so if those individual stocks don't move exactly at the same time as the commodity price, then these leveraged ETFs don't move. So again, there's not a direct immediate correlation between the commodity price and the movement in these ETFs. They don't necessarily top and bottom at the same time to the same degree. Again, we saw Chevron had an impact on GUSH not reaching a peak and DRIP not reaching a bottom at the same time that oil spiked up over 88. So I wanted to make you aware of that observation, that even though we see the commodity price spike up or down, these ETFs may or may not move up or down at that same time, and they may peak or bottom at a different time than the commodity price. There is obviously a correlation, but it's not a direct immediate correlation. So I wanted to make you aware of that if you didn't already know that. So I hope that helps. Okay, now I'm on the stock screen of the online browser version of Webull. As always, you can get 2 or more free stocks with your copy of Webull via our affiliate link included below. The first one on our watch list that we keep there to look for longs, tops in natural gas is BOIL. We can see that spike in natural gas and BOIL recently. It's hard to tell if that's a downturn or if it's going to leg back up. But again, we use that to find the tops in natural gas, spikes in natural gas. When it spikes, tops, turns down, then we look at cold to find a bottom and along a turn up. So we can see there's not a direct immediate correlation, but we can use boil and cold together to find opportunities to long and short natural gas when it peaks or bottoms. So again, we're going to be swinging that both ways depending on what the behavior is. If it spikes up, we'll look for that top and boil, and then we'll go long cold to short natural gas back down. When natural gas bottoms, we will, when we see the bottom and boil, then we'll go long boil again to long natural gas. So these are the first two inverses on natural gas using boil and cold. And again, we can swing this back and forth on whatever behavior we observe. The other one is on oil, and the long on oil is GUSH. It looks like I need to add GUSH back in there just so we can see it. So again, here's how quick and easy it is to add one to your watch list in your stock screen. You just put it in the search bar, click on the star. You can add it to any watch list. I'm going to put it back in here just so we can similarly see the inverses. So again, the long on oil is GUSH. Again, we can see a peak in GUSH here, even though really oil peaked, I think, on Friday. It peaked higher. GUSH did not react as much because, as we just pointed out, it's based on companies and individual stocks. So here you can clearly see the lack of the direct correlation between the commodity price and the leveraged ETF. But again, we know oil's going up. We expect this to reach a peak. When it does, wherever that oil price may be, we're going to look at shorting oil using DRIP. So GUSH is the long on oil, DRIP is the short on oil. So when GUSH hits a top, DRIP should hit a bottom. Those should be inversely correlated, very directly inversely correlated, because that's how those ETFs are set up. They're on, I believe, the exact same companies, and it's just a long and short on the exact same companies and stocks. So these leveraged ETFs are going to be directly inversely correlated to one another, just not directly correlated to the commodity price. So again, we'll be swinging oil. When oil reaches a peak, we'll see that GUSH, DRIP should reach a bottom, and we'll go long on DRIP to short oil as long as it declines. Now again, people are talking $100 plus oil, $150 oil. So again, these are going to be short-term swings. You don't want to, get stuck too long. If it reverses on you, then get out, take your profits, swing it the other way if you want. And that's how we can make money with these leveraged ETFs on oil and natural gas. So I hope that helps. Okay, next on our watch list is Corsair Gaming. We're going to leave Corsair Gaming on our watch list. It is holding up still. It did decline briefly in the market decline, particularly the NASDAQ decline, but it does seem to be holding up. Looks like it tested that 52-week low. It's hard to tell if it's going to turn back up or break down further. If it breaks down further, we'll let it go and probably take it off. But if it does swing up, Corsair is profitable. They do make a lot of money, so that may be an individual stock, individual tech stock, and it's in esports, etc. That may be a longer-term tech play. But again, there's risk. It's a technology stock. In the NASDAQ decline, the tech decline, there may be some risk. So we'll leave it out for now. Keep a close eye on it. See if it's if it starts to take off. It might be worth a swing. So GLDI, you will see in the comments from last week's weekly trading game plan that we went long on GLDI. We had it on our watch list. We've been wanting to get back into this. This is a monthly paying Credit Suisse ETN. Pays a nice monthly dividend. It's long on gold. And again, that's, you can see it pays a very nice dividend. It pays every month. It just went ex-dividend on the 20th. And paid, 6 cents a share at that time. So this is one, it's a gold as an inflation hedge, although not as much as in the past, but we can sit and hold this and collect the monthly dividend. We took this when gold kind of took what I feel is an irrational drop, but probably driven by a strength of the dollar. There is still an opportunity. You can actually still get this cheaper than what we got it. So, and you can see it looks like it's right at a support level and a nice stable bottom. So that's a good opportunity. We're going to take it off the watch list as we're already long. But again, you can see you still have an opportunity if you want to get into this monthly dividend paying stock long on gold. So we're going to take it off as again we're already long. You can see how easy it is to maintain your watch list on the stock screen in Webull, and again we'll leave links to our previous videos on how to maintain watch list from the stock screen. So we talked about GUSH and KOLD. KTOS KTOS is aerospace defense profitable stock that is also a buy of Cathie Wood's ARK. It's in their space ETF, and you can see it made a nice little perked up a little bit. Looks like maybe it's bottoming. Again, that's one we want to watch with the Russia-Ukraine conflict. This is an opportunity. We just want to catch it at a good price when it's actually going to break out, as it has been declining. So wherever it forms a good bottom at a support, actually swings up and maybe wait for a breakout above BeachBum, above one of these support lines, and starts to go on volume. It looks like it may be trying to break out right now. We can see the increase in volume right now. So maybe a short-term opportunity there. We just again, we want to be careful, make sure it's not going to break down further. Okay, we've got several REITs, which are real estate investment trusts that we want to add to our watch list. They're approaching a support level, and this allows us some diversification into real estate, which again you will hear many recommend a diversification. They're looking at real estate. If you don't want to get directly into real estate, a good way to diversify into real estate is via these real estate investment trusts. One and another benefit of these is they also pay a monthly dividend. So one of the strategies I wanted to talk about going forward is because we believe we're in a declining, quote, bear market for some time, and we have uncertainty with the Fed interest rate hikes, etc., and that they plan to start in March, and we might get this liftoff jolt. It's, in my humble opinion, again, this is not financial advice. We're not financial advisors. This is for education and entertainment purposes, but we're looking at plays that we can essentially ride out some of this volatility and market decline and just collect monthly dividends, etc. Once we get past liftoff in March and see what the market is doing, or we know that the market has bottomed, then we can look at more individual plays. But in the meantime, ways to make money is we can swing these various commodities. Again, these REITs are good. If they decline further, we're collecting a monthly dividend and we can wait. We're still making money. So again, that's why some of the rationale behind adding these REITs, and they look like they're good opportunities in the near future. So one we've liked and we've swung a number of times, we've held a number of times, is O, Realty Income REIT. It's one of what they call a dividend aristocrat stock. It's one of the most popular dividend stocks. You'll see a lot of references to it. Maybe one of these days we should do a due diligence just to make people more aware of who they are and why they're so popular. But you can see it pays a nice dividend. They tend to, one of the reasons they're a dividend aristocrat is they bump their dividend up like this third digit each month or each quarter. So we can also see we're looking at with several of these that are optionable. Particularly if they decline further, what we would do is we would sell covered calls against them and essentially increase our dividend. So we'll buy this, collect a monthly dividend, sell covered calls against it particularly if it's below the target price, and then we'll collect more money on it. So O is one that we're looking at. You can see it's a little higher than I would like right now, so we would like to buy it on a dip somewhere in the 65-ish range. I think 66, 65 was a target price as well. So on any little dip, again, it got pushed up on the spike late Friday, but it was declining. So if we get this reversal down here, we'll pick up O, hold it for at least a couple months, probably sell some covered calls against it, and collect more money. Another REIT that we like, we'll look at the chart just briefly. We'll see it really dipped, and that's where the opportunity popped up, but then it ran away. It may have already run away from us, but again, if we get a reversal, a pullback, we'll look at this one. This is this River North Double Line Strategic Opportunity Fund. Again, it pays a monthly dividend. This is actually not a REIT, it's a fixed income ETF, but again, it pays a nice monthly dividend. This was a recommendation. I want to give shout out to Joseph Hogue of the Bowtie Nation. This was one he brought to our attention. He recommends. We could see it went ex-dividend on January 12th. So I would expect ex-dividend in the February 12th time frame. The third REIT I want to point out and talk about right now is STAG. This is STAG Industrial. Again, it's a REIT, so it pays a monthly dividend. We can see it last paid out on the 28th. It's on industrial property, so warehouses, etc. So again, this is attractive given supply chain constraints, etc. This is one where I think it's better than on mortgages, things like that. Another reason we like these REITs is they are an inflation hedge. As inflation goes up, rents on real estate tend to go up with inflation. And therefore, these are a decent. You'll hear people talk about real estate as an inflation hedge. So again, that's another reason we like these REITs. We can see STAG came down to the 40-ish level. We kind of like it at 40, and then it ran away again on Friday, like the others. So we'd like a little bit of a pullback down to that 40 level. And then we would go long STAG and again collect monthly dividend and get additional yield on the swing back up. Okay, now we've got one that we're going to bring up from the bullpen and put on our watch list for this week, which is POWW Ammo Inc. Again, this is one we had in our bullpen, and one of the advantages of having a bullpen list is this is a list of stocks that we review not on our watch list on a real-time basis, but on a kind of a daily basis. We go back and revisit them. So when I did this on Friday, I could see that Powell looks like it may have reached a nice stable support level, and it may be turning up. So we want to add that to our watch list now because it looks like it may be attractive. It does look, like I said, it looks like it reached a good stable support. Looks like it may be turning back up, and if it does, then we will go long on POW. As it is profitable, it's optionable, so again, we have the opportunity to write covered calls against it if we want. So we're adding POW Ammo Inc. to our watch list for this week. Roku we've had on our watch list for quite a while. It's been declining. It looks like it may be stabilizing. You can see, kind of our bottom level where we'd kind of like it, which is a previous bottom. It looks, again, like it's stabilizing, might swing up, so when it does, you can see our previous due diligence video again, why we like Roku, but we're just waiting for this bottom. If it breaks down further, again, we'll let it go and wait for it to finally turn back up. So again, please see our previous due diligence on why we like Roku long term. SVXY and UVXY are the short on volatility and the long on volatility, and I think somebody could make a whole career of just scalping volatility up and down on a daily basis. I don't know if anybody, please put in the comments below if that's your trading strategy, because I think that's very viable. If you're very nimble, you could probably make plenty of money just scalping volatility up and down. You can see we have a buy sitting out here. Actually, it's at the 84 level and not the 54 level. And it just didn't hit when that's dropped, when that bottom on SVXY hit. So we missed out on this particular run, but we still have that buy out there. We're waiting for another spike in the VIX to hit that, and then we would be shorting the VIX back down as it retraces. So if we look at the long on the VIX, it's just the inverse. So we see this quick spike. We see it's been hovering in the 30-ish range. The VIX has been hovering in the 30-ish range, and on any kind of event, catalyst, Ukraine invasion, etc., we might get that spike. If not, eventually it will retrace down. And again, this is one just like the commodities. You can swing these back and forth. You can scalp them on a daily basis, etc. Plenty of money to be made just focusing on these short-term moves and these various leveraged ETFs. BTI again is the total market ETF. It's a low risk across like 4,000 stocks. It's like VOO, but even broader, less risky because it's not just the S&P. It's across a total market. It's very popular. Pays a small dividend. It's not very exciting. The range isn't very exciting. So again, this is playing a very long-term trend that the markets in the very long term are going up. This is great for people that want to do dollar cost averaging, very passive in investing. You just buy VOO or buy VTI. You can even automatically buy at dollar cost average and just not pay any attention and let the markets go up. Again, we're just looking at this as kind of a hedge, somewhere to park some cash for a while, again to get through the March thing with low risk. We haven't quite gone long. If it comes down to the support line again, we might park some cash in there. Again, the range isn't terribly exciting. The risk isn't very large. The dividend's not great. But again, if you're a long-term investor, you want to be very passive. BTI is even probably better than VOO in terms of risk. But either is good. They're both very popular. So those are our watch list updates for this week. We'll briefly look at our bullpen, and then we'll wrap up. Okay, now I'm on I've selected our bullpen watch list on the stock screen in Webull. Again, just a reminder, you can get 2 or more free stocks with your copy of Webull. You can have any number of watch lists and quickly and easily view them in Webull. You can see our watch list is pretty short, and again, anyone that's new to our channel, the concept of the watch or bullpen is kind of stole this from Jim Cramer as, you know, these are next in line to come in the game. And this week we moved POWW up from the bullpen into our watch list. These are not ones that we're watching in real time. Our automation isn't watching these in real time. But we review them at the end of the day and see if it's time to put them in the game. The first one that we've had on our bullpen for a while is Grow. Grow is an investment company. Part of their investment is in cryptocurrency. We can see we'd kind of like it a little bit lower, so we're still waiting for it to come down. It is working its way back down. And again, this is a dividend payer that we've had in the past, so we'll see if it comes down to the support level again or lower. You can see we'd like it even lower. Then we would go move Grow up into our watch list. TMF and TYD are both longs on treasuries. This is the 20-year treasury. This is the 7 to 10-year treasury. As we discussed in part 1, we believe treasury prices will continue to decline as the Fed reduces its purchases. So we're going to wait until it declines further, reaches a bottom, turns up, and then we're probably going to go long the treasuries using TMF and TYD. So again, we'll keep them on our bullpen for now, keep watching for that eventual bottom in treasuries, which again probably will not occur until the Fed wraps up their tapering in March. So for now, we'll hold that on our bullpen and just keep an eye on it along with the futures. Yalla, again, we've had on our bullpen for a while. It is a profitable technology, global market type stock. It's been declining. We'll leave it there. It's been kind of consolidating, declining for a while. Again, if it starts to pop on a catalyst or something like that, or has news, then we might be interested in Yalla. But again, it's been declining lately. So whether we keep it on there or take it off in the near term is uncertain. We're not really adding anything to our shopping list. Again, I think this market is better apt towards trading the leveraged ETFs, the commodity-based ETFs, etc. Our longs are more, again, REITs, some of the other ETFs, etc. Individual stocks in this choppy, declining bear market, in terms of longing stocks, is probably a risky venture. So we're not going to talk much about our shopping list stocks at this point. We hope that you like our weekly game plan for the trading week for this week. Thank you for watching the video to the end. If you found this helpful, we hope that you will choose to subscribe to our BeachBum Trading YouTube channel, and please click the bell icon below to automatically be notified whenever we publish a new video. Please also share this with your fellow traders and friends via the share button included below. And let us know if you found our weekly game plans helpful in the comments included below. And let us know how we can improve. What would you like to see more, less of, etc. Thank you again for watching. Good luck and have a great trading week. Bye.